Well, good afternoon, everybody. Hope you're having a great day. This is Rob. Let's go ahead and make sure you all can hear me. Go ahead and type in a number 1 for yes or 2 for no in the chat box. And let's see how many wise guys we get with a 2. And for those of you that are following along with us on YouTube, you can drop your answers right into the YouTube channel in that text chat. And we've got somebody monitoring it. There you go, Jeff. 7. I get it. It's kind of like a 2, but almost like a 1, right? Afternoon, Kevin. Hey, Deborah, how are you, dear? Hey, Diane, how's everything going? Brenda, good afternoon. Welcome, everyone. Hope it's been a great day for you. It has been an interesting one, that's for sure. Absolutely. So welcome to Power Out. For those of you that are brand spanking new, we do this each and every week on Mondays. We give 100% live, pure content in what we do here. Did you send that to support, Brenda? We are going to go ahead and look at some candidates today. Just keep in mind that each and every one of those are meant as for educational purposes only. No recommendation or advice is to be given and or taken. All right, so let's go see what's going on. We've got Patterns in a Flash coming up first. It's a bonus for Tony's Patterns in a Flash training. He's doing them twice a month live, so 2 1-hour trainings instead of 1 1-hour training. March 10th, March 24th. Excuse me, on the next one's 8 to 9 p.m. Eastern. Trading You we do twice a month. There's one left in the month of March, the 17th. Inner Circle is on the 19th and 20th, and then Monster Market Movers on 25th. Our mastermind group comes up on Tuesday night, 8 p.m. I am teaching in there this Tuesday, and then Power Hour. Here we are. And then, folks, Coach's Corner, brand spanking new. It starts on the 19th. Brandon Wendell, CMT, for those of you that know what that is, it is basically a PhD in technical analysis. Brandon Wendell is going to be kicking it off and teaching the very first one that we do. I am real excited for it. It's going to be basically like a Power Hour is, but with different coaches. So you'll have Brandon, you'll have Ryan, you'll have Tony, and they'll be taking turns teaching in there. Once again, making sure that the focus is on getting you some great information, some candidates to look at and so forth, but just from a different perspective than just watching me do it, right? So make sure you watch out for the emails to get registered for those. Let's see, we've got Patterns of Success coming up on March 29th. There's also one coming up in April. Tony's putting together a class to help explain a little bit better how patterns work for you. And then Power Option Plays, Covered Call Explorer, and E-mini Think Tank are all on their regularly scheduled program for this upcoming week. Yeah, well, it's going to be really fun. I'm looking forward to Coach's Corner. I really am. I can't wait for it to start. We've been talking about it and working on it for a while now. You may notice, we got an icon on the page now. The Stock Market Millionaire is the name of the broadcast, and that is our podcast. Right, so we are uploading our first podcast up there today. So we've got 4 of them done and ready to go. From what I talked to Sean earlier, it should be ready for tomorrow, which means you can go to our website. You'll see a podcast link for it. You can go to iTunes and download it. You can go to Spotify, all the major sites. You should be able to find the Stock Market Millionaire on there. Right, it's going to be a lot of fun. I'm actually going to ask for some of you that are trading the market and doing some interesting things to come on there with me and maybe be interviewed, talked with, and basically having a conversation, but about how others are trading the markets and what they're going through and doing. All right, here we go. Whoop, there it is. Let's go see. So let me take us back. So the Dow is up 439, the S&P is up almost 16 points, and the NASDAQ crushed again 115 to the downside, right? So we go and look at the S&P 500. All right, here we go. What a great move. We had a nice pop. Guys, the opportunities were immense. Look at the move this morning. We get a short move up. We run into that 3863.97 level, which... let me do this so we can see all symbols. All right. So what do we got in there? 38.63.97. 38.63.90. I think we did on a moving average was what I had that down from. But we ran up to that level. And let me open up full screen again so it's easier to see. And we failed. Right? If we go back and look historically, you'll see that there's a lot of power. Look left, right? There's a lot of power at that level. A lot of strength. And then we came and closed right at the moving average, pretty close. We opened up flat, basically, meaning we opened up where it closed. It started to climb. There was an opportunity. And then it came back and bounced again, right? About this time, you're at that 1030-ish level, right? That time, a lot of the run was over, but we had it. It came right down in here and bounced. That would be, well, it's a bearish candle, Rob, but it wasn't. It opened here and started to run. That was a bounce off the 8, right? Great opportunity there. Good moves, right? The Dow is the bigger number that's up. And of course, NASDAQ's getting absolutely crushed at this point. If we do a quick search, or sort, I should say, by winners and losers, right? Google, the number one guys or gals, whoever, number one company getting hit in the NASDAQ today, down 28 points. Give me a second. Let me grab my tracking machine. It's on the other side of the room. There we go. I cannot wait till we get past this COVID garbage and we can do this from the office. Guys, we've got a phenomenal setup in our office with a ticker running, real-time ticker running on top of our charts, of our back wall, rather. It's just awesome. All right. So when we look at Google, I had Google down, bullish with the pullback to the 8, aggressive is what we had it as. And if we go and look, you take a second for it to register intraday. So we're sitting right there at that moving average and the 236 confluence. So we're waiting for a close here. If we can get the close, this may be the opportunity to the upside, right? Let's look at a couple of others. NVIDIA is down 23 points today. Gee, I don't know, go figure. Big move down, retest of the moving average, and a fail. Is the opportunity there. This was a bearish bias with a day trade as our note. So hopefully some of you poppers, those that are in power option plays, were able to take this trade as it made for a great move overall today, right? So definitely excited about some of the setups that we're seeing out there. Another NASDAQ stock. I mean, NQ is getting smacked. So actually, let's go look at NASDAQ. Right? Quick move down, popped back up, failed, back up, and we're all over the place. It's actually running into a pressure cooker almost right inside of here, give or take. We can go up a little bit higher on this top one right there. Right, so we're inside of that rectangle. You can watch for a break of the rectangle, and if you get the break to the downside, especially after the moving average cross, we've hit lows of the day already. Actually put in new lows of the day. But if we can get that break down, ideally you want to break. Whoops. You want to break, a retest, and a fail, and that's the way to go. Amos said it failed off of the 13,000 level. There you go, Amos. That was the double top pattern we took in there today. Right about 13,000. Tom said, bought the weekly first solar 77 puts, hoping the NQ continues to fall. There you go, Tom. I love it. I love it. Anticipation of the moves of the market. What can we do to capitalize on it? All right. Wunderbar. Wonderful. Good to know. Good to see. All right. So I want to go ahead and, guys, we got an amazing amount of emails last week asking us, once I introduced and started talking on all different channels, once I started talking about what was going on with the S&P 500, we got bombarded with questions on it, which is why we put out there about the S&P 500 today, There you go. Amos, is that what you picked up today on SPY? Guys, let me know how your trades are going. Throw them in now. Tell me now how you doing today? How are your trades going today? Making money, losing money, breaking even? What's going on today? Not trading? Let me know what's happening today. Put them in. Amos is up $1,240 on SPY today. Amos, was the analysis we did in power option plays over the weekend helpful for that? There you go, Trader Will, up 157 bucks. Yes, good, good. I'm glad to know. Because we spent a lot of time on Saturday going through that. Ellen said, making money to the downside on the Qs. That's it. I love it. Let's see, $400 on CL. And of course, guys, we figure everything to be paper trades, right? First Solar is another one right now, Tom said. Trader Will said, and dipping well and doing well in other positions. Got it. Roman said, booking is up, Tesla is down, both 30% ROI. There you go. Whoop, there it is. There it is. Excellent. Good. So I want to spend just a few minutes going over the potential breaks of to where. Guys, we're at a very critical point right now, right? If the S&P can get back above and hold, let me see what we can do here. Good. Can hold back above this 38.52 level, above the 21 moving average, above the 8 moving average. I mean, realistically, we can go ahead and we could put a rectangle right about in there, which covers the, and again, I may be off a little bit, but it covers the 21, the fib line, which is the 382 fib line, and the 8 moving average, exponential moving average. We need to close above that zone. If we can close back above that zone today, it's not a true bull, but it gets us back closer to that bullish move, right? And I think once we see, NASDAQ kind of led the way and S&P followed up a little bit behind it, but we've had strong moves in both. I think the pullback, and we need to analyze, let's see. Maybe we'll do that tomorrow in Mastermind. Yep, let me write myself a note. Those of you that are in Mastermind, remind me for tomorrow. Tomorrow night, remind me. I want to look at the NQ at NASDAQ. I want to do an analysis. The same thing. That we've done here on the S&P 500. I want to do the exact same thing. Let me just confirm it's actually me teaching tomorrow. It is. I'm teaching Mastermind tomorrow. Okay. Yep, I'm in there. So, Amos said, close above and a retest tomorrow. I'm all over it. There you go, Amos. Yeah, I don't know, Sarah. I'm not sure about the NASDAQ. I don't want to do the whole analysis here. It just takes too long. But I'll do it, and I'll share it as we do, but I'll do it live in the Mastermind for us tomorrow. So when we look at the market itself, the market is always the S&P. We're going to look at a couple of green lines that I've got drawn in there. And I've done my best to kind of move them around so they're not in your way, right? So the very first one is a 10% correction, right? That move, I'm close. It's not exact, but I'm close. It takes us down to about 35.50, right? Is a 10% correction from the highs of the 39.50.43. All right, that's number one. Come on. There we go. Okay, just trying to get video there. I thought I had it open already. All right, so that's 10% correction is what we're looking at to the bottom of this line right here. That's the first level. All right, we're not there yet. If this is the recovery, I will be a little saddened. I'd like to see us get at least down to that level. That is my highest of all of the 4 levels that we've got drawn on our chart, right? But if we don't, we don't. But we really need a pullback. And I love that we're getting nice pullbacks in the NASDAQ because I own a bunch of NASDAQ positions. So I'm looking for places to actually add to my positions, right? So from there, we go down and we look at where it says 100% fib extension to the current fib. And basically what I'm looking at is this. if you take this Fibonacci move between the two blue lines and you extend it out to this level-ish, I'm going to be off a little, I'm sure, but this move between here and here, right, or the green line here, is 100% of this move. So if this was a 300-point move, this is the same 300-point move. It's 100%. They're the exact same level that we've made those moves in there, right? So that's level 2. Right now, for those of you that have been around me for a while, you know that I focus very heavily on fibs, Fibbits, right? All the Fibonacci type stuff. This is a 100% failure, or whatever you want to call it, pullback, retracement. That 100% of the original fib is just that. It is a Fibonacci move that we're looking for in there. So looking to see, can we get that kind of pullback? That's number 2. Number 3. All right, we've got the, let me leave the brown line alone for now. Let's do this. Let me go to the last one, and we'll kind of come back and do the other one in between. All right, so this last green line is a 20% pullback, or what is known as a correction, right? And that correction is a bear market. See, 10% is just that. 10% is really correction. The 20%, I should actually change it to pullback, but that's a bearish market is what we're looking for. We get down there, and here's the sad part, right? The way Wall Street defines it is, if we ain't pulled back 20%, it's not bearish yet. So they're still buying or recommending buying or holding or whatever it is until we get that 20% pullback, right? And at that point, we've got a correction. We've not had a lot of that since COVID was a big, COVID was a big part of the pullbacks, the adjustments, the fails in the overall market. But from the standpoint of a layperson, you know, you're holding a portfolio and you get into pullbacks and you're not managing your positions on a regular basis. I'm not saying good or bad. You know, someone that doesn't know anything about the market, trying to time it is a real mistake. Someone that's a little more skilled could still be a mistake, but overall, you've got a much better opportunity to manage it or adjust to it if you have a good understanding of the markets. Now, from here, the only thing that we haven't talked about is this very thick brown line, that 33.8250. I'm going to share something with you that's a little bit busy on here. Let's see. And I'll just apologize for it now. Okay. Like, what? I know. All right. So let me scrunch the chart down a little bit. Okay. We've got a black line right here, which is 25.84. Very dark black line. I'm not sure if anybody else having problems with their trade station, but mine is disconnected at least 25 times today, including just now. So 25.84, that is a major Fibonacci level. If you do a Fibonacci number series, that's a major Fibonacci level. I remember watching as we got up to that level, right? And the excitement from me, from the students, from all of you guys was great. Up here at 41.81 is the next major level, right? I'm not going to go through how we develop it at this point. I go back and watch last week's Power Hour. It was in there. I went through it, right? But then we've got this brown line, which is the 33.8250 level. That is the midpoint or a fibit between these two levels, between the 25.84 and the 41.81. That's the midpoint, right? I made it a dark brown line stick out so I can kind of see exactly what's happening, right? If I work my way back in, and let me unscrunch this. Let's see. Okay, so I'll go back here to F8. All right, as we pushed up right over here, let's go back and look at what's going on. This was February. Let's see. February-ish. Okay, you could see we ran right into that puppy. Let me try to step it out a little bit more, and let's scroll back to Feb. February is here. Look at this. Look at this. We bashed our head into that level, and we collapsed. Did it happen on purpose? No, but here's the thing. COVID kicks in about this time, right? Starts kicking in about this time, right? That's the pullback in the S&P here. So what's taking place? Why? Well, we were at such a critical level already. When this hit, folks, it just collapsed. And was this the average mom and pop driving the market down there? No, people weren't selling. They didn't know to sell. They didn't know what to do. Most people, it's in their 401ks, they have no idea. And for many, they're not doing it online. They got to call a broker. And guess what? The phones didn't work. Nothing worked. No one was picking up phones. They shut the country down. There was nothing. So most people were holding on. They weren't getting out of positions. They weren't managing positions. But it happened at a major level. As we start working our way back, you could see that we moved up to the same level, which was the all-time highs, right? We moved up into that level then, let's see, in August. We played around. We finally got a break, and then we failed and fell back. And, where are we? We're in the midst of the summer, and we just start getting this yuck move, right? We go into the beginning of fall. Now here we are at the end of October, and we get a nice catalyst. We push right up to it. If we look on this day right here, remember this level, 33.8250. Our high, 33.8950. 7 points over. Oh, but Rob, that's 7 points. No. This is a $3,000 index. $7 difference is nothing. Nothing at all. Right? And then we just burst right through it. Right? So as we're looking at this, and we look, I'm going to scrunch back down. Let's see. Keep going. Find it. We've got that line in there. Now I want to show all four of them at once. All right. So no real correlation between these two. I mean, I can do some very advanced analysis on it, but for our purposes, what we're trying to accomplish, we're not going to spend the time on that today. Again, maybe we do this in Mastermind Group. But we're looking at this brown line is the next one. So if we get the 10% correction, we get the 100% extension of the current fib, we're looking at the 33.8250 level as our next target. And then, of course, we're down here at 31.60 or so, 31.60, 70, somewhere around there, as our 20% bear market correction on there, right? So we've got a lot of opportunities if it fails. All right, what if it keeps going up from here? Then we just, listen, you trade the market at hand. But Rob, you said it. No. What I said was, if it goes down, we've got some targets. We've got some guides. I own a bullish position. We break through the moving averages. We start to fail. Am I holding all the way down to the 10% correction? You've got the information, the ammunition. You can make that decision now. You can't do that if you don't have the information. You need to have it in your hands. You've got it in your hands. Right? Power Hour is just that. It puts that information right in your hands. Let's see. So Amos said, look where we're stalling. It's the Fibonacci. Yep, exactly. Exactly. So Peggy said, scrunch and unscrunch are technical terms you never used to teach. Yeah, I know. It's the F11 and F12 key. They are technical terms, though, Peggy, without a doubt. They are technical terms. The F11 just brings it, scrunches it down, squeezes it in. The F12 brings it back out. All right. It's another way of being able to see certain things on the chart. I don't really want to be this far zoomed in, see this long a term. I really want to see here, but for our purposes, then I can pull this down and make the adjustments here instead. All right. So you can still get a view of what's happening overall. Right. And then if we hit the escape on Trade Nav, it puts us back. Right. So 1 for yes, 2 for no. Was that helpful to go through it? We had so many questions last week on this as we put this out there. And where are we at? All my ones coming in, a lot of them are coming in from those that I know are trading, those that are in the inner circle and power option plays and mastermind, and ones that I know you guys are trading. Right? The Amoses and the Romans and the Daniel and I mean, I can't see them all, guys. They're just flipping through the charts really quickly. All right. So I appreciate the feedback there. We got a good amount of people in here today as well. So, all right, awesome. So now you tell me what stocks you want me to look at today. What ones do you want to focus on? As NASDAQ took a little bit of a bounce. Now we're inside those moving averages here. Big candle. Oh, I'm going to go bullish. It bounced. Right? It's a lot of people stopping. I'm not saying they're wrong. Not at all. But how many times have we seen a head fake like this in the market? Right? We'll see. So drop your ticker symbols in, and we will take a look-see. All right. So the very first one, Roman put in Amazon. Nope, that wasn't it. I'm just looking at what positions we've got open to see how we're doing on them today. All right. Let's go to F5. We need a little more history. All right. So on Amazon, we've got it as a bearish neutral, bearish below. Nope, that's Amgen. Bearish with the pullback to the 8. Okay. Bearish with the pullback to the 8. So nothing yet, Roman, on this one. You know, that 29.87, we talked about that over the weekend. That 29.87 has got some strength to it. It's not only what we've been here, we've been down here and here. It was our first, was it the first? No, it wasn't first, but it was another type of H pattern that came down. It actually pulled all the way down to the 618. But you can see the hold right there. The hold right there, and we're back at it again. If we can get that continuation, we get that bounce, Roman, 30.71 and 31.38 are upside targets. The 31.38 is the 21 EMA, right? Just FYI. All right, Brenda is asking for the Qs. All right, so here we are on the Qs. So we've already violated the negative 618. We don't have a great place to draw in here. Actually, we could be drawing bearish on this. That's exactly what we're going to do, is put a bearish fib in there. Let's see, 303.5, 311, 4 to 11 is 7.5. Yeah, we're good. We don't need a fib it inside of there. So we're okay on that one. So Brenda, you know, we're looking at that 303.5 as support, and then 300.5 as the next support. Of course, we need 100-point levels in here as well. And on the upside, 311, great confluence with the 8 moving average in there. Really nice, 311.85 versus 311. So sweet. Good. Brenda said about where my bearish fibs are. Beautiful. There you go. There you go. Good job, Brenda. I hope that helped. Bill, how you doing, sir? MAR. Marriott. Okay. Oh, we got that bounce today, didn't we? We were looking for that. We need a new fib inside of here. Yep. Let's see. Let's go snap a new fib in there, Bill. We're going to come off of this level to here. Right? Let's see. 49 to 59.10. We don't need a fib it there, but we might need it on the top side. 59.71 is 12. We do. We need to fib it up here. So we only need the negative 136. Okay. So Bill, we've got, is it confluence? So 147 is our 8 moving average. We're looking at 149 is our fib line. We're at 150 right now. So is it confluence? It's close. I'd like them a little bit closer, but it's close, but really not there. So the moving averages are all in bullish alignment. It's true bull. The bounce from here, Bill, looks like 159 on the upside and then 165 beyond that. You go back and look historically. So you can see with Marriott, we are back to pre-COVID numbers, right? So as far as recovery stock goes, yes, it recovered. Without a doubt, it recovered. All right, then we look for Target. All right, let's just pull that out. Fib is fine. Nothing wrong with that fib. We're in a bearish bias right now. So if we pull up to that 177.5 level, Bill, and fail, we're looking at 174 as the downside target. If we violate it, meaning we push higher, you've got the 181 as a day trade, but I wouldn't be doing any swing trades until we get the moving averages aligned better to more of the bullishness than where we're at now. And then overstock is another one. Let's get a bigger picture. All right, we don't need a new fib in here. We just need to adjust this. I mean, we're not true bear, Bill, but we are in a bearish bias right now. So this is the one thing that we'll look for, Bill. In monster market movers, what are one of the major, not asking it, stating it, one of the major strategies, techniques that I teach are various Fibonacci trades. The one I want to look at here is called the Fibonacci 4-step. And we'll do this without the moving averages on here. Okay, there you go. Good. All right, let me get a pen. Okay. So what are we looking for? This 764 level is one of the keys, right? The very first thing that has to happen is we need to close below the 764. Happened right here. The wick doesn't matter. The wick can go all the way down to the other side of the world. Doesn't make a difference. It just cannot close below this green line, which you can't see it, but it's the 0.882 fib line. All I did was split these levels in half. That's it. Come back above with a close. Let me grab a different pen. Still too thick. Actually, let's grab this. Okay. So on this day, all right, let's try that again. On this day, we got to close above. So if you go back to the position in the chair, right? While we were below that 764, this is Rob. This is the position in the chair. Ain't doing nothing. Hands are way back here. Keyboard's all the way over there. No trade going on with this at all. Once we get a close above the day that I've got the arrow pointed to, right? Once that happens, I go from this position to sitting up in the chair. It's not to take the trade, but it's now take notice of what's happening, right? Kind of pull in a little bit, take notice of what's happening. The very next day, let's bring it in a little bit. Okay. I'm seeing it all now or not. Let me see. Okay. So it's this first one right here. The very next day, so that is November. Right. I just want to zoom in so you can get a bigger picture of the candles. You're not kind of scrunching your eyes to see it. So that's right here. So the one that I had drawn, where I had the arrow, was that candle right there, right? So what does that mean? The next day, we got a retest of that level. My mouse is just disappearing. It's fading away. We got a retest of that 764 level. So remember, on the previous candle, the long white candle, at the beginning of the day, I was here. We got above the 764, the red line, I was here. The next day, I am now at the edge of my chair, reaching for my keyboard, which is usually right below my monitors, reaching for my keyboard to go ahead and place that trade. And what am I looking for? I'm looking at this pattern right here. Let's actually do it this way. Let's get rid of those and do this. I am looking for a breakout. I'm looking for a retest, and I'm looking for a bounce. Whether your bounce comes the same day as the retest or the next is completely up to you. Whether your entry is on that candle or that candle is completely up to you. Are you the person that waits for it to close and then bounce? Or are you the person that says it hit it, it bounced, I'm taking the trade? That's your call. That's your risk profile, for you as far as what to do. Our target is the next fib line, which is right here. Right? So we go from, I don't know, we'll call it 56. I have no idea of the exact number, up to 66. So somewhere about a $10 move. Did it do it? It sure did, with a vengeance. We came back again. We closed below. We closed above. We retested. Boom, there's another $10. We closed below. We closed above. We came back down. Little tough one. It worked. But for me to have taken that, probably not. All right, let's clear it all off. And now we're looking at the January of this year is the one I was looking at, which is right here. Right, so now what? Now we're looking there, Bill. Do we get another close below the 56.01? Not close below the 47.26, although we can go there with the wick, not close. Bounce, get back above the 764, the red line, 56.01. And if it does, so if I draw it out with nothing on there now, watch, check it out. This is it. This is the magic. Right? Break down. Come up. Retest. Boom. That's the entry right there. Right in there. And your target is here. Your stop is somewhere down below your 56.01 level. All right? Bill, was that helpful? That's the trade setup I'm looking at on Overstock and it's one of my favorite setups. It's got an extremely high probability when the rules are met properly. Now, with all that being said, this trade works best when it's the first time that it does it. It has done this before, 1, 2, 3 other times. It tends to lose some of its viscosity when it goes like that. So just caution, tight stops, of course, but this is just like every other trade. You're playing the probabilities. Are you willing to risk $1.50, just throwing a number out there, to try to make $10, $8? Right? You've got to answer that question. I can't. Yes, Bill, it's absolutely different than what we do in pop. And yes, it is counter trend. So it's a whole different set of rules, without a doubt. If we go and look, Bill, nope, wrong one. If we go and look here, what are we looking for? We never get into the Fibonacci 4-step. It never comes down below the 56. It stretches up to the 66.83. The 8 is there. It fails. What are we looking at then, Bill? Well, now we're looking at the move down to 56.01. And then from there, 56.01, the 47 is, let's see, 17, 38, 48, 58. Yes. So from there would be 47 would be the next target. Right? Makes sense, Bill? I was just trying to give a little bit more above and beyond the standard of what we do with power option plays. Let me know if you're good. Let's see. Does it lose its ability to rebound? So the sooner or later you keep testing that level, testing that level, testing that level. The expectation, Tom, is a failure, right? So does it lose its ability to rebound? It increases its ability to fail. The first opportunity, the first test of that level, the first one, will bring us about a 78, 79% success rate with the first test of that level, all rules being equal, right? Closing below, all of that good stuff. And there are some nuances to it as well. The second time you go in there, you drop 8 or 9 points off of the percentage of success in there, and then it just continues to drop every time it shows from there. But then, Tom, there are candidates that we've had that I've had 6 and 7 times in a row. It crushed it every time. It was like a knife point. It came down, whoosh, straight back up. I was just amazing. But it's not the standard. It's more the exception than the rule. So, yes, Bill, that's what I had said there. Bill said, can we play the downside with the confluence of the 8? So if we can get the move up here, Bill, absolutely. If we get the move up and we close right here, and this is a NASDAQ stock, and NASDAQ's bearish, right? Is turning bearish that day or moving bearish that day. Get the roll off of there, the bounce off of the 618, absolutely. 56 is target 1, right? And target 2 is 47.26. Yep, with 100% certainty, Bill. Which one you choose to go with is totally up to you. Following the pop rules, it would be the latter, the second one, the one we just went over off of the 618, the purple line, 66.83 would be the better one to take. Thanks, very helpful. Good. All right, Bill. Excellent. And Bill, I got your question on the spread stuff. I'm working on getting you an answer on that. I think it was your email. Let's see. Larry said that was the Fib 4 step that you described, correct? Yes, that was the Fib 4 step. Hopefully I described it correct, Larry. Hopefully I did. Hey, Robert, how you doing, man? Yes, it is 12 noon Eastern time, Robert, not Central time. Robert's thinking I got an hour left. We can hang out. No worries, man. No worries. Okay, let me pull it up a little bit. I'm losing the symbols at this point. All right, let's rock on. Forward. F. Forward. Oh, yes, baby. Talked about this one last week. I brought it up last week when I was on the Benzinga show. I think we had this one. Might have been in, I think it was in Cover Call Explore again this weekend. Small move to the upside. We got it. Boom. There was the entry opportunity. Great opportunity on Ford. Big covered call fan. I wouldn't be doing diagonals on it. Covered calls, yep. No, not Central Time, Robert, exactly. Let's see if we get here. Come on. Let's see what we can find. 13. Somebody please divide 0.22 divided by $12.81. 0.22 divided by 12.81. Someone tell me what that comes out to be. I know you all got calculators. They're on your phones. Right? Great move. Who was asking for 4? Brenda. Great move. If you caught it already, awesome. If not, it's a little late to the party at this point. So we're looking at 0.17. So 1.7% for 1 week on a stock like Ford. Would you take it? What is that? 4, 28, 2.8, 6.8% for a month. Man, I'm all over it at 6.8% for a month. At this point, Brenda, I'd need a pullback if you hadn't already taken the entry. If you did catch the entry, we're looking at 13.60. Now, could you trade it directionally? You could, folks, but here's the thing. It's a little guy. Their options don't move a whole lot. The stock has moved 61 whole cents today. Do we have somebody that has big volume today on the call side? Let's see. So let's go with this option here, all right? Which is the 12.5. All right. If you caught Ford right out of the gate, you paid about, we'll call it 30 cents, right? You paid 30 cents, which will put it right here. Not the lowest, but about 30 cents. Right now, it's trading at 46. It's 16 cents. Can you make money there? Yes, it's 16 cents, but it's 16 cents, guys, right? So for me, Ford is something I can kind of set up, walk away from, collect my percentage on it. If I can collect 6% in a week, in a month's period of time on something I just kind of set it and forget it, I'm okay with. Let's see. All right. Hope that helped, Brenda. Let's see. Tom's asking for First Solar. Oh, actually, let's do that here. I have all my fibs all drawn on, nope. Mega charts is what we're calling it. Will be shortly. All right. Now there's a potential Fibonacci 4-step setup, right, Larry? You seeing it? right? Same thing, Bill, what I talked about before. So on First Solar, this was Tom. Yeah, so below the 74.19, targeting 68.75. I got 68.59 as support. Yeah, absolutely, Tom. I'm seeing it. I love the close Friday. I love the retest today and the fail, without a doubt. Without a doubt. You're good. I like it. I like the setup a lot. You are welcome, Tom. Ameritrade. Oh, no, it's Ameritrade. No, it's AMD. Sorry, not TD. Let's unscrunch. Let's pull it out a little bit and see where we is at. So we're in a bearish bias right now. I would love for the moving averages to have a confluence of that 79. It doesn't. So even though the moving averages are a true bear, I would be doing more of an aggressive trade without getting a confluence in there. Would be my preference, my choice, right? For me. Let's see. Amy, did you or Amelia, did you guys get a link from Sean? I asked him to send something over to you guys. Did you get it? All right. So we're looking here. We got the fail today. I mean, we stretched back up off that 79 and we failed. 74 is target 1. 70 is target number 2. Right? Somewhere above that 79.02 is your stop. I would definitely be above yesterday's highs for a stop. Okay. Hope that helped well. Tesla. Ooh. My cardiologist is a fairly savvy guy when it comes to the market. He's got some good knowledge on his head. And he was talking about going out to buy more Tesla the other day. He's long-term in it for a long time now. He's got it from way back when. So he's talking about adding to his portfolio with this pullback. He was asking me about where I thought the opportunity was to take a bullish entry. It ain't today. All of that to say it ain't today. Okay. So what does that mean? Well, where are we? We're in a bearish bias right now. True bear as of today, which means we could go to 10 contract trades if we chose. We're looking at that 619 resistance and a 600 level. That kind of messes us up a little bit, having both of them in there at the same time. We're not quite there to remove the 100-point levels yet. We're getting closer, but we're not yet. So the failure takes us down to 548 though, and then 519. So lot of opportunity here. A lot of opportunity on this. Give me a second there. My throat's getting a little scratchy. All right, so that's my targets on First Solar. Tesla, Sarah, right? Is that 548 and then 519 level. Stop has got to be above the 619. Even if you're getting in now, you got to be above the 619. It's Tesla. And what does it move a day? We'll call it almost $50 a day from high to low. It's got some movement to it. Yeah, Robert said, how did my shot go? Am I feeling okay? Yeah, a little sore in the arm. That's it. Just like someone punched me in the arm. Other than that, nothing. We'll see what happens with the second one. 2 weeks from this Friday for the second one. So at least I got a weekend kind of chill. I did all of my work on Pop and Covered Call Explorer on Friday night. So in case I didn't have Saturday, wasn't feeling well, I was good to go. Let's see. Jesse's asking for XLY. Consumer Discretionary Select Fund. This is okay. So it is in a bearish bias. It's not a true bear, Jesse. True bear, and here's what true bear would mean. The 8, you've got 3 moving averages that are important here. The 8, which is pink, write them down. The 8, which is pink, the 21, which is green, and the 55, which is brown. All of them are exponential. To be true bear, the 8 would have to be on the bottom. The green would be in the middle, and the brown would be on top. We're close. The green is just to the high side of that brown line. So we're close, but not close enough. We want it to be true. We're not true yet. So I could take a trade, but I would have to take it as aggressive, which means a maximum of 4 contracts in here. Right now, I've got this set up as a channel, Jesse, which it's done phenomenal for us in our channeling pattern. Our Fibonacci lines have worked extremely well. Look at these. I mean, we just get driven back and forth, back and forth. So we're going to use those levels. Now, Jesse, I like where it's sitting right now, 159.38. Get me up near that 161 level-ish, just shy of it. You got 160.83. Close near it, fail, and roll over. There's the bearish opportunity. 154 is your downside target. You could go and take half off in the middle if you wanted to. If you had 1 contract, I'd be going right for the 154 above it. So maybe 155, 56, somewhere around there would be my exit target to the upside. All right. So I hope that helps. Hey, Barry. Barry, you're in that field, aren't you? You're is it chiropractor or something? Trying to remember now. Apologies if I'm off, but yeah, thanks, Robert. Yeah, life is good. Life is good. Sisters and nerves. Okay, so Barry's saying do range of motion exercises after getting a shot. Yeah, so I've injured my neck a couple of years ago, so I do stretches every morning for my neck. So I'm in the arms and all of that stuff all the time. I'm up here doing these, right? Or these type things all the time. So good, I appreciate that. All right, let's see. So Jesse, I hope that was helpful. Larry's asking for a kiss. A kiss? Oh, never mind. KSS. My bad, Larry. My bad. So anyway, dum. We don't really have a great place to redraw the fibs from. We need them, but we're not there yet. We don't have a real good pullback anywhere. True bull. Notice the difference here, folks? Pink's on top, green's in the middle, brown's on the bottom. That's what makes it true. We are true to form. We're true to them being in the correct order. We got our bounds. It doesn't give us a lot of room up to the upside. The moving average is in the middle. I would probably wait for a move above that 59.69, retest and a bounce would probably be my preference of what to do next. Right? Because trying to get in here is very difficult with that resistance right up above head. So I like the pattern, Larry. I just need it to kind of chill out a little bit. Robert's asking for GME. You know, I did not look back at, well, no, I still have them. My bad. I still have puts. Holy mackerel, back over 200 bucks. Huh. So let's do this, guys. GME. Robert, have you looked at selling a put on it? We need them all, baby. We need them all. Come on, Papa. I need a new pair of shoes. Wow, they're not giving anything for 20s, huh? So, wow, last week this put was 35, 40 cents. I forget exactly what it was. I've got a couple open positions right now on shorts. And it's worth 7 by 8. So we're not getting anything for this week on it. Let's see. I really wouldn't want to go to next week. I'd rather not. It's too far out. Yeah, look at that. God. 27. Too much time to go that far away. So, yeah, I like the pattern, Robert. You still holding? Oh, you're looking at selling the 800 strikes, Robert? Or a number of contracts. I don't think they have 800 strikes, do they? They do. Holy mackerel. Yeah, if you are, listen, Robert, if you are short, if you're along the vehicle, right, the instrument, the equity, right, the GME stock, and you can get, let me see, that might be this next week, right? Let's see. Yeah, let's look at this week. Let's look at this week. I didn't realize they went up to 800s. You can get $3.50 for the 800s, which is what, $400, $350 higher than the highest high it's been. Way to go. I actually got close to 5. It's $300 above that. I would be all over it, Robert. Absolutely. I'd be selling this day in and day out. Oh my goodness gracious. Yep, I certainly would be, Robert, at that kind of money weekly, without a doubt, especially on today's move. Let's see. All right, so we got GameStop in there. Diane's asking for CVS. Bum, 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 bum. All right, so our fib is going to be back here. Okay, moving averages are nowhere near the right order. We're getting lower highs, a little leery about it. Be very cautious in their drugstores. A lot of these, guys had popped. Not really sure the reasoning behind them. People buying more stuff at drugstores, maybe, I don't know. The Walgreens, the CVSs, and so forth. Just be cautious with this one, with those lower highs in there. Now, with that being said, could this be the turning point? The 8 gets above the 21. We're not that far away. We could simply turn this very quickly into a bullish bias. If we do, 74 is resistance. And then 79, nope, we actually need a fib in there. So 70 to 74, we need them both. So we're going to split both levels in half with the 136 and the 118. All right, so we're there now. 74 and then 76 and a half are resistance levels. Oh, guys, here I wanted to say this. Amy, not sure if you, or Amelia, if you guys replied back to me. Let me see. Just want to make sure. Amy, did you get something from Sean, Amy? You're welcome, Diane. Okay, so let me do this. He said he sent it to you right as we got started. Sorry. Let me try this. Let's call him.
Greetings. I'm actually following the conversation now. Do you want me to post it on the chat?
Please. Thank you. Bye. All right. Sean's in class with us now. He's hearing the conversation. And he said, hey, you want me to drop it in the chat for you? Yes, please. Guys, a lot of you are brand new. You don't know anything about, and when I say brand new, I don't even mean to trading. I just mean to some of the ways that I trade, the things that I teach. Fibonacci's in particular. There is a free training that, for those of you on YouTube, make sure you take advantage of it. Can we drop a link on YouTube also there? Sean, Amy, one of you guys, Amelia, can we drop a link out there? This training is a Fibonacci training that I did, right? It's a 3-part series on fibs, what they are and how they work, how to use them in one particular trade setup. It's free. There's nothing to it. Just tell us where to send the links to. You'll get them in 3 days. I don't want you cheating and going ahead. I don't want you going, oh, let me watch the third video. No. You got to watch the first one and the second one. You'll get the third one on that third day, right? It's hardcore. It's all technical. It's all about the things that I do. It's helpful for those of you here to try to bolster up your knowledge about this a little bit. So it's worth the time you're going to spend into those videos. So Sean, I appreciate you dropping that in. WBHQ Tech. Okay, there we go. All right. I just wanted to do that before forgetting. Again, those of you, if you could drop it, Sean, my other monitor with YouTube went off. If you could drop it in there. Oh, it looks like we did. I appreciate it. It's awesome. Good. Thank you very much. So guys, you can check that out. Let's see. We got enough time for 1 or 2 more. Daniel's got Abercrombie in there. Let's see. So Abercrombie has been one that's been on our list a couple of weeks now for covered calls. I don't think we made it back again this week. It was just up a little bit high. So I want to see the pullback. I don't have a real good fib on it anywhere, Daniel. I think we're going to blow through anything that we would possibly draw. Maybe not. I mean, that's the best we could do is right there. So pull back to the 30 and then move to 33 is what we'd be looking for on this, right? Let's see. We can go ahead and shift over. It's been fun watching my computer make decisions all day long of let's just shut down now, TradeStation saying let's reset now, and so forth. I just want to share something with you guys here. And it is importante for you to understand what's happening here. So guys, inside the Wealth Builders stuff area is our trading clock. Some of you have asked for these for a long time. We've been back ordered on them. We got very few of them came in. I'm going to go ahead and drop the link in the chat box. Right now, guys, the clocks are $69, right? Plus the shipping. And it's a metal clock. It's 14 inches in diameter. It's about 2 inches thick. Glass front. It's not these cheap plastic things. I don't believe in them, right? I like this. Mine is on the wall right there at 90 degrees from where I sit, and I can make a very quick shift of my head, see what's going on, where we are in the market, what time zone we're in, and go, ooh, we're between that 12 and 2, lunchtime, be very careful, don't take that trade. There's an entire document on how to use the clock and how it works and what the red, green, and yellow means. Obviously, 4 p.m. to 9:30 a.m. is nothing for the equities markets. But I have a handful of these left. Daniel, yours, I saw the order come through. We got that over to the guy to get it shipped out for you. So it should go out within the next day or two. So yours is taken care of on that. Guys, if you're interested, take advantage of it. If you're not, that's okay. The reason I'm saying it is that $69 price is going up. Where we had this conversation the other day. Some of our costs have increased on it. So, and listen, the other part of it is, guys, when the bottom line, it's all said and done, we don't make a ton of money on clocks. We don't. What we make on each clock is hardly worth the effort. It's more about getting you the tools that you need. Besides that, whatever profits do come in on these, if you go back to our homepage and you go down to the very bottom, which we're doing a complete redesign on this, St. Jude's, ASPCA, and Wounded Warrior, that's where things like this go to. If you buy books that are in our resources and we get a $4 check from Amazon, ooh, okay, that's going to change my life. These are what we use to make our donations, right? And as part of them anyway. Yeah, too much time value in the price of the clock. I love it, Robert. I love it. Yeah, so take advantage of it if you're interested. If you're not, that's cool. But I want to throw it out there before the price goes up and someone says, I wish I knew, right? And we only have a handful of them right now. We've got 100 plus on order. We can't get an answer from the factory as to when we're going to get them. So, all right, ladies and gentlemen, there you have it. You have a wonderful rest of your day. God bless. Stay focused, hyper-focused on the quest to becoming a great trader. Keep crushing it. And remember, folks, you're just one trade away. I will see all of you at our next update. And do not forget, Coach's Corner coming up next Friday. You'll see the emails come out on it and watch on the members area for the banners to start flipping in there that you can start registering. All right, take care, folks. See you soon. Bye.